We have Carol Roth on with us. Hello, Carol. How are you? I can't hear Carol.
Yeah,
there you
are. Oh, great. I was saying, what a better way to start the week than with you and your fabulous community. So off to a fantastic start.
So let me give some good news to this fantastic audience. Big news from Florida. The law that we spoke about the last time that Justin Haskins was in town in Dallas, we were talking to a Florida representative. It is working. More than 100 Florida banks, including some huge nationally chartered banks, have just signed an agreement with the state that they will not discriminate on the basis of customers' political views. This is one of the main reasons why we wanted this in the first place. You can see the legislation. I'm going to tweet it out here in just a minute or so. The legislation behind this is the same that we've been promoting since the Great Reset book was released in January of 2022. Same legislation that lawmakers learned about when they came to the summit that we hosted at Mercury One in Dallas. And it's the same one that I talked about when I was on the stage at the Pro Family Legislative Conference in November of 2023. This is a massive, massive win. Donald Trump has also formally committed on the campaign trail to stopping banks from discriminating on the basis of politics. The whole point of the bill that we were pushing in Florida. If other states pass bills like the one in Florida, we will win and destroy ESG. We're getting an update. Hopefully I'll have one by the end of the show on how many other states are taking this up. But Florida, again, is leading the way. Donald Trump says he is right with this. We need your state to follow Florida's lead. The banks are jumping off, and they are actually signing promises that they will not consider your politics when looking at loans or anything else. That is huge, Carol. Huge.
That is huge. And I want to point out, Glenn, this is the second grassroots win that we've heard about within the last 7 days. And I am so proud of you and everyone in your audience who has been saying, I'm not sure that I can make a difference, but I'm going to try. I'm going to write a letter. I'm going to send some comments in, whether it's to my state legislator or representative or to my governor or whoever it is. We're seeing that when enough people stand up, they can make a difference. And that should inspire and fire everybody else up to continue this because it is working. And so I'm thrilled, by the way, that I get to say participate in some good news on your program.
I know. That's going to end soon. Your mood won't improve much. But I do want to point out what you just said. Talk about what happened last week that was another massive win, and it started with this audience.
It 100% started with this audience, and it started with you and Marlo Oaks, the treasurer out of Utah, who brought to our attention these natural asset companies and the fact that the New York Stock Exchange had gone to the SEC and said, we want to list them. We want to list these companies who can control and manage natural resources. And we said, no, this isn't going to happen. And so you brought this to everyone's attention. We came up with a template. People from this audience, hundreds of people from this audience came, emailed me personally for that template, sent it in. And there was so much pressure that the SEC didn't even get to rule. The New York Stock Exchange withdrew the rule because of the pressure from patriots, from this audience. It was an absolutely huge victory. So now we've got this, we've got the ESG, we've got the non-discrimination, we have momentum. So certainly lots more work to be done, but everybody should take that moment to take a victory lap. Doesn't mean you have a party for the rest of the year, but for a quick moment to say, I made a difference if I participated.
Big
and
difference.
If you didn't do it the last time around, next time around, do it the next time, because the more people who do it, the more of a chance we have to make that difference.
So we're going to get into why this is so critical that you understand the power that you have and really know it. It's critical. Make sure you're listening next hour because I'm going to show you massive moves now being made on silencing voices like ours to alert people like you. So you may have to be the replacement voice to encourage others. It is the digital ghettos are being made right now, and they're going to start putting people behind those walls soon. Okay, so Carol, let me explain the discount window and see if I have it right. Discount window at the Fed. Think of a bunch of windows at a bank where you walk up to windows. The discount window was where banks, if they walked into the Fed, which is the bank of banks, okay, so all those windows, there's bankers at the windows, no people like you. And the discount window was the kind of shameful window at the end that everybody could see. And you could walk up to the discount window if your bank was in trouble and say, I need to borrow some more money. I need it here because we're getting a little dicey on our books. And all the bankers could look over to see who is in line at that discount window. And then they'd say, Bank of George is in trouble. Did you see that? George was just up there. The Bank of George is in real trouble. And so it was shameful, and nobody wanted to go up to that discount window. After 2008, they took all that shame away, and now you can walk up and go, yeah, man, right? Are we all in trouble? You bet. Can you give me some more money? Do I have that right?
Pretty similar, and it's an unfortunate name because the discount window does sound like a place at Nordstrom where you'd maybe get a discount on some good goods, right? But you said it is sort of has a stigma attached to it because
Correct.
Within the banking system, within the plumbing, as you noted, banks lend to each other on a regular basis, and if you're in good shape, you may go if you have a liquidity need overnight or for a short term, you may go to another bank and you may get a loan, and that's actually what the Fed funds rate sets that target
Correct.
rate of lending at that we hear, oh, we're going to go up 50 basis points, we're going to go down. That's that interbank lending rate. The discount window, as you mentioned, is at the Fed. Funny enough, it's not even at a discount. It's actually at a premium to the Fed funds rate because banks who can't get the money elsewhere have to go to the Fed. We've heard the name or the phrase, the Fed is the lender of last resort. And that's if you're in line at that discount window, it's because you've got nowhere else to go
Correct.
in order to get that money for your liquidity. So while that information isn't reported, usually on a case-by-case basis for about 2 years, you don't know specifically, there's enough detail that participants in the market can infer who's
Correct.
going to those windows. And then also it's a very important market signal because in the aggregate, if we're seeing a lot of loans being taken down via the discount window, which is reported on a regular basis, we can infer that there's trouble in the banking system.
Correct.
So like we did last March when there was the banking crisis, you saw this huge spike in discount window usage. So I think that kind of pieces this all together.
Okay, so now what has the Fed done?
So there is a new rule that is being worked on. This had been rumored to be happening for a long time, and now it's finally come out. And it's between the Fed, the Treasury, and I believe it's the FDIC. And they are planning to say, well, because there's so much, actually, they're not saying because, I'm getting ahead of myself. So they're basically saying they're going to introduce a new rule that if you are a bank over a certain size, I think the $100 billion is the assumed cutoff point, that we're going to force you to use the Fed discount window every year on whether you need a loan, whether you don't need a loan, whether you could borrow from another bank, doesn't matter. We're going to make sure that you do it. And the reason they think we're so stupid, they say, well, the reason we had this crisis in March wasn't because we had all of these underwater, securities on banks' balance sheets. No, that wasn't the issue. It was because they couldn't figure out how to use the discount window. So this will be like a dress rehearsal or a fire drill. So if you do it on a regular basis, now you know, and we can avoid the other crisis, which is absolutely insane. And if you believe that, I have a bridge to sell you.
That is like cops saying, we've got to fire our guns, at people once in a while because otherwise, if something happens, we won't know how to fire guns at people. I mean, that's crazy. Of course they know how to use it. That's their job to learn how to use it. It seems to me they're forcing these banks to do it so we don't know who's in trouble anymore.
Bingo. So there is this great newsletter called FX Hedge, and they brought this out into the open, has sort of surmised the different reasons why this was happening. And I'll add my own flavor in here too. But like you said, the obvious reason is that they're trying to obfuscate the information and the signals. They're trying to hide what is going on in the banking system. So that's the clear reason, the only reason why you would force everybody to do it. Because of course, if you're part of the Fed system, you're going to know how to use the discount window, right? They're big, huge banks, and they can't figure out how to use the discount window. I mean, it's absolutely insane. But it also kind of, if you start going down the line, it means that they must think that there's some reason for them having to hide this information, which is the various issues and weakness that we have known for a while remains in the banking system. On top of that, this FX Hedge newsletter also talked about the idea of consolidation, something that you and I have spoken about a lot within the banking system, and centralization. That if the banks are no longer lending it to each other and they're now relying on the Fed, this is shifting the banking system away from, more of a quasi-free market to a more Fed-controlled system, which we know is something that we have been concerned about with CBDC. And then, a fourth reason could be these liquidity issues that we're seeing in the Treasury market and the need for the Fed to find ways to increase its balance sheet without calling it QE. So lots of possible different reasons, but certainly that first hallmark reason that they're trying to hide information and issues within the banking system is just, it's not only a head scratcher, but it's a red neon sign.